Okay, welcome everyone to this new module. In this module, we're going to talk about counter trends. We've talked about trend trading. We know what sort of a market structure you need when you're trying to trade the trend. The problem with counter trend is a lot of times what traders would like to do is they would want to take, sells when the trend is pushing up, or they want to take buys when the trend is pushing down. The problem with that is because as price is moving up, you'd want to look for a sell. You'd want to look for a sell because you feel like we've reached a rejection level, we've reached a resistance level at the very top. Let's say, for example, if we talk about gold, guys will try to take sells, they'll try to call tops, or you're going to try to call the bottoms. Calling the bottoms means that you're trying to take a buy as price is falling down. Calling the tops is when you're trying to take a sell as price is moving up. The best thing to do at that point, like if you really want to counter trend trade in an uptrend, write this down. If you want to counter trend trade in an uptrend, you have to wait for two scenarios to happen, right? So in an uptrend, you have to wait for price to create support, okay, and then break that support. Because once we break that support in an uptrend, then you can take a counter trend trade. Make sense? So in an uptrend, you're trying to take a counter trend trade, you need a support to form, and then you need the support to be broken for you to take a sell, because that's the only way we're going to take a sell. Normally, we've talked about in trends that you can only take a sell once price is creating a resistance in a downtrend, right? That's something we talked about in the trading the trend module. In this here, we're taking a sell after we break a support for a counter trend trade in an uptrend. Make sense? So price. So let's talk about this right over here, right? So first we're going to talk about the uptrend and taking a sell at that point, right? So for example, let's say we got bullish candles, they're moving up, we're moving bullish, and we start to go up, and now we start to create some sort of a resistance with a bearish candle forming. Now, normally when a resistance would form like this, we may say, oh, like, you know what, we're forming a resistance on the, let's say this is your 30-minute time frame. We're forming a resistance on a 30-minute time frame. So now this is a good opportunity to take a sell for price to move down. Awesome, perfect, right? But sometimes, well, most times what I would say is may happen is that the next candle wicks down and then we start to push up. So you've basically lost the trade because you tried to fight the trend. And guys, always remember this, the trend is your friend. If price is moving bullish, don't look for sells. Don't sell at the first candle closing bear, because when there's a very strong trend, one candle closing bearish, let's say in an uptrend, or one candle closing bullish in like a downtrend, is not going to mean the trend is changing. That it doesn't mean that the trend is changing. The trend only changes when you have a structure formed. Whenever you have a structure formed and that structure is broken, then you can say that the trend is changing in the specific session. It's not like, let's say on a 30-minute time frame, you have a candle breaking support in an uptrend and you're like, oh, the trend is changing. No, the trend is not changing. Maybe that's a bearish move in that session, in like, let's say your pre-London session, London session, pre-New York, New York session. Maybe it's a move during that time, and that's all we're going to talk about here now. So let's say, right, so we formed resistance at this point, and you have to wait. You have to wait. So let's say we have another candle that pushes down, and now you have a candle that closes bullish at this point. Now, you have a candle that closed bullish. This means we formed a support. If a support is formed, then there's a high probability that the next candle can push up, right? So now we're talking about trading the trend for a little bit, and you measure this range, and this is like a 15 to 20 pip range because your resistance is right up over here. So like, at this point, price is just basically consolidating at this point. But we're looking for a counter trend trade. You're looking for a sell in an uptrend, but your conditions are that a support has to be formed, which is here you have support formed, and number two is that the break of that support, the break of that structure. Because if an uptrend looks like we form support, move up, come down, form support, move up, if this structure is broken, right, if this is broken, then there's a high probability that price will continue to push down. You see what I'm saying right over here? right? Right here. See what I'm saying? This is the same thing that we're going to use in the structure when we have candles forming. So once you have support form, all you need to do is to say that, okay, you know what? All I'm going to do is I'm going to wait for a candle to break below support, because once we have a break below support on a 30-minute time frame, which is a strong confirmation time frame than the 15-minute, then there's a higher probability for the next candle to continue pushing down, because you have that break of support. So once you get that break of support, then there's a higher probability for the next candle to continue pushing down. Okay, so what's going to be your confirmation candle in this scenario? In this scenario, this is your confirmation candle right here. Confirmation, because this candle is closing below, breaking and closing below support, and now the next candle is continuing to push down. Now this confirmation candle, this can form in an infinite amount of ways. If we talk about, okay, like, you know what, the body size or the pip size or the wicks and this and this and that, but generally speaking, what I may want to see is that I may want to see a candle, the confirmation candle, to close just the way it's closed right now, or, you know, it may form something like, you know, a bearish right over here and then a big wick right here, right? But still, it's breaking and closing below support. It's making a lower low. It's making a lower high. You know, so these are normally the two ways the candle is going to form. But essentially, if you're looking for a counter trend trade in an uptrend, please don't sell at the first candle closing bearish. Wait for market structure, because as you're waiting for market structure, you are practicing patience. You're practicing, like, you know, letting the candles close, letting candles create market structure, because it's not about how fast you can win a trade or how fast you can find a trade. It's about how fast and how quickly and how efficiently, actually, you're able to read market structure. That's the most important thing. So I would want to see a candle closing with a nice, healthy, strong body, which I can say, okay, you know what, I recognize this, and I think now there's a high probability for price to continue pushing down. Now, sometimes, as you're waiting for this confirmation candle, what may happen is you may have the candle just continue to push down, you know, and this is what we've covered, what we have covered in our impulse entry section. So you may want to watch that as well, the impulse entry module. This is something we've covered in that. So for counter trend, you are, let's say, in an uptrend, you're waiting for price to create support and then break that support for a sell. That's what you're doing in a counter trend trade when price is trending bullish. So super simple, no confusion. The main thing is 30-minute time frame strong, 1 hour time frame strong. You know, we've talked about stop losses in another module. So let's talk about doing a counter trend in a bearish trend. Okay, so bearish trend. So for example, let's say we have a candle that's going down, but for candle to go down, let's choose the red color right over here, right? Awesome. So let's say you have candles that are pushing down in a bearish trend, right? One candle like this, you have another one that we push down, bearish candle, boom, boom, boom. We have a trend pushing down. That's a very clean trend, right? I wish every time a trend would look something like this. And then you have a candle that closes bullish. Now, whenever a trend, and I remember a story, this is back in 2017, early 2017, and gold would push bearish, or pound yen would push bearish, and I would take a buy, and we were on our way to have breakfast. This is like, you know, New York Open, after New York Open, and while we're having breakfast, I'm just constantly buying as price is falling down, and I keep losing because the next candles, they continue to push bearish more and more, and I'm like, man, this was support to the left-hand side. I don't understand this, what's going on? You know, and then I slowly understood that, okay, you know what, if one candle is closing in my favor, which is bullish, this does not mean that price will continue to push up, because now I'm trying to fight the trend. So what I had to do is I had to take a step back, and I was like, okay, you know what, I'm going to trade this trend. I'm going to start to trade this trend, and all I'm going to do is, while I'm starting to trade this trend, is to wait for some sort of a resistance to form. Because once we have a resistance forming, okay, so in this case, let's do this. In this case, let's say that the retracement was bigger, right? We had a bigger retracement, and then candle close bearish, whatever. and you find out that this range is actually 20 to 25 pips. So you have a 20 to 25 pip range. Now, in a normal market environment, you're looking at this, and if this is a 30-minute time frame, you're saying, okay, you know what, I got my confirmation in a downtrend, candle is closing bearish, I got 20 to 25 pip range, so there's a high probability for the next candle to continue pushing down. Great, awesome. But if you are someone who is seeing the trend fall for a number of days or number of hours, and you believe that, okay, like, you know what, even if we have a range, even if there's confirmation, even if I want to trade the trend, but the trend has been falling down for so long, it cannot basically continue to go down even more. Okay, that's what you're thinking at this point, that it just could not continue to keep going down anymore. So what you do is you're like, okay, you know what, I'm just going to wait for this resistance to break. So if you're taking a buy in a downtrend, right, so you take buys in now two scenarios. The first scenario we've talked about in the trend. The first scenario is you're taking a buy in an uptrend. When price creates support, you take a buy, right? In the second instance, you take a buy as a counter trend trade when price is trending down after it breaks resistance. So write this down. You're taking a buy in a counter trend trade in a downtrend when price creates and breaks resistance, right? So in this case, we've created resistance, and you're like, okay, you know what, there's a high probability for price to maybe have a little bit of a retracement, so you're waiting for confirmation. And your confirmation is going to come with this candle closing bullish. This is your confirmation right here. Now you got your confirmation candle, and you're like, okay, like, you know what, there's a very high probability for the next candle to continue to push up. We push up, awesome. Sometimes, you know, this candle can maybe also look like this, but in both cases, we are pushing up. You got your confirmation candle closing above resistance, and there's a high probability for price to continue pushing up. Now, in the same way, this confirmation candle can also close in, you know, different ways as well. For example, let's say if you're looking at this, you're saying that, okay, I need a confirmation. Maybe this candle closes like this, you know, just how we talked about in the selling example. It's the same way here in the buying example. If a candle is actually closing above the zone, if the body is closing above the zone, as long as the next candle respects the low of this previous candle, there's a very good possibility we can continue to push up. And we've seen this happen. But the only caveat is that the new candle has to respect the lows of the previous candle. Very important, guys. This is actually very important. Right now, sometimes as you're watching this, you know, the next candle can close bullish, but it can close below resistance. You know, that can happen. If that happens, it's not about the candle closing bullish, it's about the candle closing above that zone. It's about the candle closing above that resistance. So if we're closing below resistance, then maybe there's a higher probability we could get a candle to go bearish in this case. You know, who knows? But the main idea is always, whenever you're looking for a counter trend trade, never believe just one candle as a confirmation that now the price is going to go to the opposite direction. Never do that. Always look for structure. Market structure, and a break of that structure will going to give you a much higher understanding and a much higher evaluation of your trade that you're trying to take. Because let's say you're looking at an uptrend and you're trying to look for sells. You know, you're looking at an uptrend, you're trying to look for sells, and as you're looking for sells, you're not taking a sell with just one candle closing bearish, whether it's 1 hour candle, 30-minute candle. Sometimes you can get those trades, but when you do get those trades, and you do, I would say, accidentally win those trades, you start to think, man, this is going to happen forever. This is going to happen every time, you know, a candle forms that way. No, you got to look at it correctly. The correct way to look for a sell when price is trending up is to see whether we're going to create a support And then if we're going to break that support, because if we break that support, then you can take a sell. Same thing goes for in downtrends, you're looking for buys. So this is one thing I look for all the time. I'm always looking to see whether, the candle can actually break and close above this resistance for price to continue pushing up if you have clean range to the left hand side. And obviously, we've talked about this a lot. You need to have a volume in a session. Then there needs to be a session when there's volume. And man, trust me, this is just as simple as it is. You look at the charts, you look at the way the candles are forming, the way the candles are closing, at what time, then you're going to see massive amounts of volume flowing through those times. So I would say maybe watch this 3 or 4 times over and over again and look at some examples, look at some things on the chart. I know there may be some examples that we're going to do later on, but and also in some simulation sessions, but counter trend trades are risky. It's better to go with the trend. Sometimes what may happen is that you may get a candle to close above. I know this may be a question going through your mind. If a candle does close above a range, the next candle can just close back below the area as a fake out, right? That actually can happen, and that's something you need to keep in mind, and that's why you're keeping your stops below the previous candles, or you understand how to manage risk, because managing risk, very important, right? So that can happen as well. So anyway, good luck, and we'll see you in the next module.